Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, March 11th, 2024. There's actually not very much to be adding to the current analysis other than the charts now are totally updated onto the June contract. So we have a history leading up to what I was showing over the weekend in the podcast. So today, the market did continue to move lower, and seemingly in a very disorganized fashion. And what I mean by that is if I could take it down to the 15-minute chart real quick, and we just take a look and open this up. Here was today. Basically, we finished up right in here. We bounced around overnight. Market opens. We do a slide, figuring, hoping that complete the B wave, right? We were looking for the A of 3, the B of 3, putting in a C of 3 now back up. But very unconvincing. Lots of 3s, not many 5s, not really a triangle. So just trying to piece together what did the market do today. I am going to label it as an ABC wave B. B of 3, that is. This is A of 3, B of 3. So let me go back out to that. Oh, and then just to finish, if this could be the start of one of C of 3. And what I mean by one, wave C should be 5 waves. So if this is wave 1, it is not uncommon for with even in a C wave, but mostly it's within an A wave, we get a diagonal start to the whole thing. And sometimes it's called ending, but this is the beginning. So it's just a diagonal to start in a first wave position. Often, though, it would really fall into an A wave. So I'm like looking at this going like, okay, not really sure what the market is attempting to do, except it has this upward slope to it. So, and we're now, going to finish off or finish this additional hour after our regular close by continuing to buy in and move things higher. So that it all fits in that we are looking for higher levels. We are looking for a move back above what we've reached here at 52.56, and this would have been last Friday. So everything kind of stays still in place in terms of what the expectations are. What starts to become confusing is like, how are you going about getting it done? Now, what I've done is I've added a fib just to kind of get a grip on the C wave, right? A, B, C here, as a part of that larger B wave within the a little bit larger third wave. I know third wave going up, and here we are with this big down cycle, and now we're going to go be bopping back up again. That would be my expectation. Now, can I say with 100% certainty that is still going to be the case? And the answer remains no. This market can just, turn lower, pick up some speed, and just really start to go and start to break down. Now, granted, I kind of, this is again for the functional C wave, but if it's within, it just really should not be breaking below 51.25. It should not be breaking below 51.25 if it's going to stay within a third wave. Here's the start of the third wave, 51.25. That's the ABC for the A wave, if it's a diagonal. So you can see it's very messy up here. The rallies are great. The declines are great. So just on a pure trading standpoint, and then basically day trading standpoint, love it. Today was, the moves were okay. They were congested. They were kind of weird, But inside the 5-minute bar, inside the 2-minute bar, there are some nice little moves. And you can go in, collect your money, and be done. And that, of course, as I stated in our trade room, I mean, the goal is to make $300, which is the cost of the trade room. I try to do that every day for members that are in the room. Let's continually make the cost of this trade room every day. So not only that, but then if you think about it, if I can achieve that and everybody else in the room can achieve that, then that's quite the investment for what your return on that investment will be. So again, I also intraday, yes, I'm working on Elliott patterns. I'm trying to piece together what the puzzle is now putting before us. But there are times when it's just I'm trading the price action. I'm trading against fibs. I'm trading against value area high and low. I'm trading against points of control. I have on a 2 and a 5 and a 15-minute chart, I have moving averages. So there's many additional things that I can capture when I'm inside these moves to trade and to make money. Now, position traders, I can imagine that you're going like, okay, what do we do now? Where's it going to go? Even if you're a swing trader, swing trading, what a mess. What a mess. So I get that. I really do get that. If you're taking a little bit longer term picture and still believe in upside yet to come, well, then maybe you're positioning yourself for that to occur. Now, let me just say, because I'm going to start to add in a little bit of the cycle work that I'm studying and that I'm looking at and considering, that we have the CPI tomorrow, and then we have the PPI on Thursday, and then next Wednesday we have the Fed. So there are some cycles that are coming into a cycle low. And that's kind of fitting. And that cycle low may have hit today, might have hit this morning, but still just some residue from the cycle, or maybe not totally bottomed yet, seem to kind of hang on for today. But if this cycle has now kind of come in, and it's kind of like there's a little bit longer term, and then there's a midway, another cycle in between, that they're coming down together. That has led to enough downside, I think, to maybe get that cycle low in, and then the cycle turns and starts to its up phase, its up cycle, up phase of that cycle. And I have that kind of marked mid-March. So, and if that remains the case, then, we're kind of looking for a continuation of the upside, which is what I am looking for. And that would be very fitting that the market begins to move and gets that extra little boost from the cycle itself, pointing higher, starting to move prices higher across the board. And then we get up there to complete at least this third wave. So once this market does top out, though, that those same cycles begin to point lower into April, into May. So again, it's getting really kind of interesting as to where we are in the Elliott count of getting this thing completed. So I'm kind of like trying to review everything and keep it all up to date, and looking at things here, and does this all still fit? What if this is the end? What if that is the end? Because it was 5 waves. What if this completed the whole thing, and at that high, and then it's all done? These are just ifs, not anything beyond that just yet, because I don't have confirmation. So again, back to the S&P. How I'm leaving it right now is that A of 3 is in, B of 3 likely, leaving additional possible downside as this C wave is not complete yet. But the higher we get, we start to break above the 50, which sits right at, let me just say, 51.92. right above where we're trading, we start to break above that, it should start to really give a more convincing signal that, okay, we're now going to go up. And we're going to start heading back towards above 5,200. Then we have 5219, we'll call it. 5259, which remains from minute wave 5. It remains as resistance. I think it will be exceeded within wave 3, which then brings us back up to 5307 and then 5343. Those kind of remain the zone, the topside zone. If we get 1, 2, we get a 3, we get a 4, and we get a 5. We'll be drawing our trend lines. Once I get connecting points, I'll fill in those blanks, and we're likely going to be heading, hopefully, up into here. And it should not take forever. Let me state that as well, because the cycles don't necessarily line up with this taking very much longer. Now, having said that, tomorrow I am going to leave open the potential that we swing lower. We should know definitely by the time we come in tomorrow morning, because it should, I believe, roll over within Asia or European markets, more likely European markets. And we'll know pretty quick. But if it does, we have support at 51.50 to 47 down in there. And then beyond that, 51.23, which is that low. I'm just not looking for wave B to even come in close to being the same length as wave A. And wave A started right here. So, that's 51.25. So 23, then we're breaking it. And can it be an irregular? It can, but it's supposed to be a zigzag. And a zigzag, the B wave doesn't come down and overtake the A wave. It doesn't even equal the A wave. It comes in, usually right where we're holding in our support areas. So we're already allowing a little bit of excess and then to bounce back. But it needs to keep bouncing now to the high to go up. That would be the thing. But I am leaving it open. I'm also leaving open that this is all done. And I'm now going to be looking at something else developing. But I need to see. Market's not been convincing, nor has the market been very revealing of what the intentions are here. There was a lot of back and forth today. All right. Over in the NASDAQ, the beast. The beast got pulled, punched, blocked, kicked all day long. And let me just show you what this thing did today on the inside. Look at this move. At least in the S&P, it's angling up. And here, it's a sideways. If anything, it's a triangle. A, B, C, D, E, D, E. I'm just, okay, let's just try to do this carefully. That's an A, B, C, D. Crazy, because it's a new high. So you can see it's even more difficult. You can't put a finger on it to say what it is. Is that this is A of something? A, B, C, D. Doesn't work. So it's this very wild, unrecognizable type pattern, although it does seem to be a little bit of a wedge. Is it a little bit of a pennant? What side of the pennant are we looking at here? That tends to be a little bit more angling higher. This is a little bit more flat. So again, confusing. Need to wait and see what the market wants to do. But here as well, I've done my best to say, okay, maybe that's the A, the B, and the C, because this really does can count out as 5. I'd put the B there, actually. So let me angle this just so that it comes in correctly, because see, 1, 2, 3, 4, 5. I'm like, okay, well, I got a 5 down. I can label that C. This can be a B wave. And this can also label as 5. So I get a 5, 3, 5. And I'm sure I could probably get this to be 0.618 of that. Maybe not, but I'm going to give it a good shot. So, and it stuck above the 100% point. So go back out to that hourly. Oops, yeah, I can use this one. Come out here. And let me change that. Let me just go a little bit, put it back on our candlesticks. And now let's just take a look at this pattern here. What do we got going on? Still, I'm going to do the same. There's a 1, 2, 3. I know about that, but I'll show you one more time why. You can see here, 1, 2, 3. There's the 4-way up there. Much cleaner 5. But I keep it on the candles because it's for trading. We tend to use those. So 1, 2, 3, 4, 5, wave A. A, B, C, wave B. And is this the start? Is this the start of wave C up? Now, if it is this one, and this is a very strange looking 2, that could be. It just kind of, okay, oh, look at red. Hanging man, the little big, heavier hanging man, big, heavy hanging man, so to speak. I'm being a little bit facetious there. But these bars and these tails continue to show pumping up. Really, when what was it today within the NASDAQ? Well, Apple decided to catch its breath and rally. And we also had Google catch a good bid. And Meta got its butt kicked. Microsoft bounced back and forth. NVIDIA really bounced back and forth. There was one point in the morning that NVIDIA decided, it was during this little rally, NVIDIA was like, okay, well, we're done being going down. We're going to go up now. And I think it got up $4 or $5 or $6. And then somebody said, oh, no. And kabam, and then down we went again. So interesting day, but I'm going to give it the same benefit of the doubt that we possibly have completed this B wave right at that point. And if that's the case, then we should start to rally. What's going to help the cause? We get ourselves quickly back above 18,300, back above the 50 and the 200, with the 50 crossing hourly basis, crossing the 200 today. Not good. Definitely not good. The 20 crossing the 200. Now, guys, so basically, if this continues, we're going to be more in alignment to go down than up. I wanted to make sure that we saw that today. There's one potential negative in the works, and that's that the moving averages start to line up with 250, 20, 8, 4. All kind of starting to point in this direction rather than in this direction. That again makes me stop, go back out and go like, what is all of this? Because here again, this is a new high over that. And by a not a huge amount, but a fair amount. So here we sit. I'm needing confirmation. And the only thing that can give it to me is the market. Now, once again, tomorrow morning, we have CPI. And we also, let me see what else, if anything. We have the FIB optimism. We have consumer. We have the CPI. And the monthly federal budget, what you do, comes out at 2. But sometimes that can have a little effect. But the big one to watch and to see is CPI. Right now, median forecast is for consumer price index overall to increase by 0.1%. The core to decrease by 0.1%. Year over year to remain unchanged, and the core to decrease. Now, flip a coin to see how they're going to take a look at that. What number really makes sense, right? if the overall consumer price index, which is the core and all the rest of it put together, is increasing, then what is really decreasing? It's not energy. It ain't food. So we get the conversation going, like people going like, well, maybe it's just corporate greed. They want these higher prices because they're going to pad things now. If we're really going to go into some hard times or whatever the deal is, it's like, really, so steal it from the people that can at least handle it. It's always good. So anyway, we got that coming out. And then Wednesday, nothing. So we get a day to digest and churn over the consumer price index as we look forward to Thursday with the U.S. retail sales and the producer price index and initial jobless claims. So Thursday morning, all at 8:30 a.m. Eastern, will be much more attentive to market reaction. Now, if we go to what we did last month, CPI caused a downslide, PPI caused a massive rally. So here we are. What shall we do? We will find out shortly. But my best estimate or guesstimate, or however we want to call it, is that A of 3, B of 3, and we start to rally. The market really did begin to look. There were points where it was like we saw buyers moving back in. Now, but it wasn't broad-based enough to really pull everything up. And that's kind of what we need, some leadership out there to begin to pull when the markets move together, we get some great moves, and they were not together today. All right, now back here in the NASDAQ. The moving averages, same deal, folks. 50's crossing the 200. The 20's still above, but see, if once it does, it's the 250, the 20, the 8, the 4. Going in the wrong direction. We're looking for them to turn and start going in that direction. And they're not. So it's going to become very interesting in my view. Again, on an intraday basis, here in the NASDAQ, there were plenty of good moves. There was good moves here, all the way. All the way. Not the best conditions. A lot of jerking around inside the bars. And I'm talking 2-minute bar, 5-minute bar, a lot of jerking around. So it took patience and risk management to kind of be able to get in there and handle it. But there were plenty of opportunities to at least make the trade room goal, which again is the cost of the trade room, which is $300. So as long as I can keep that up, you make money. All right. I am going to finish there again tomorrow, CPI, and we will see what happens then. Our next update will be on Tuesday, March the 12th.